Alrighty, I'll just let members know I'm jumping on live to do this video. If you're rewatching this later, we'll give everyone a couple of minutes to tune in. I want to talk about the trillions of dollars that have flowed around the world to different markets today. So double check this is coming through loud and clear. Keep an eye on the comments. And please share this around, as always, friends and family, different groups you're in. Helps grow the channel, guys. Much appreciated. And a lot of what we've been talking about for a couple of years now is really starting to play out. So what a time to be alive. So 60 billion wiped off the ASX today, and lots of other markets around the world. The US had a pretty rocky day. It actually got worse for a little bit today. I want to talk about how Bitcoin was correlated to that compared to how it's previously acted. I'll keep one eye on all the comments. Someone's talking about the rain delay in the cricket. I'm hoping that the cricket does get away tonight. Hey Michael, hey Glenn. Alrighty, we've got 85 watching already. Smash those likes up. And we're going to get into it. So let me know your questions. Volume up a little bit. Is that a bit better? Talk a bit louder and clearer. Awesome. Thanks, Josh. Thanks, Russell. Alrighty, so this is the daily chart of the stock market. Now, last year we were having that big rollover, and I spoke about how the Federal Reserve were in a bit of an ego battle, a tussle with the markets. The Fed were talking about how they were going to raise interest rates. And you guys know we've been doing a lot of videos about debt around the world, particularly in Australia. If you've got a massive mortgage, a car loan, you're trying to pay off your student loans, you can't afford to pay that back if they keep raising up the interest rate, the interest on that debt. Those payments cripple you. And what happens is consumers have less money to spend on other things. And so the Fed raised rates really aggressively. They've basically finally got away from that zero mark around 0% and got all the way up to 2.5% over the course of a couple of years, very gradually. But that last couple of rate hikes, the market said, there's no way that the economy and the bond market, I'm going to tie all this together during this video, can withstand interest rates that high. You're out of touch with reality, as I tweeted about this afternoon. And sure enough, the Fed did a backflip. They sort of backed away and said, we're done raising rates now, because they were talking about taking them even further to, 3% or higher. So the market loved when they got what they want. The Fed said, we're going to stop hiking interest rates. But now we've started to have a lot of bad data come out, particularly from Europe and China, the trade wars, tariffs, all these things take their toll on the economy, and the market rolled over, and it's had its bounce recently, but now things are starting to get a bit worse again. So today was one of those days where it just trended down the whole day. But let's bring up and compare the Bitcoin chart, because previously Bitcoin had been acting as almost an inverse correlation. Let's bring up the Binance one there. Almost inversely correlated to the stock market a lot of the time. So this was probably, a great example where the market went up and Bitcoin went down, but unfortunately, as it got really nasty and this selling continued in a pretty sharp fashion, Bitcoin got dragged down. So I want to talk about what is going to happen in a stock market crash. How's Bitcoin going to act? Because if we zoom out and have a look on these longer time frames, this is what I'm talking about. Previously, when stocks had been going down really hard, Bitcoin had been going up. So that's not necessarily a direct rotation of people selling their stocks and going into Bitcoin, but this was fear about China and the trade war. And, during that time, Bitcoin, particularly with that China aspect, that was kind of the sentiment that was driving those markets. So let's have a look and talk about the bond market. And then I'm going to talk about this other story. We have this Chinese scam with a lot of Bitcoin and ETH being sold, pulling the price down. So today, the amount of negative yielding debt around the world hit a new record high at 16 trillion this time. So why is there more bonds that are now carrying a negative yield? Well, basically because the US have some of the highest rates in the world. And the 30-year Treasury bond in the US fell below 2% for the first time ever. And so what that means is lending money to the government for 30 years, you now only get 2%. So in theory, the longer you lend them for, you should get a slightly higher rate because of that duration. And everyone is rushing. Everyone is now desperate to get a bond that has 2%. So even though that's a small amount, relative to the rest of the world where bonds are negative, 2% sounds like a great deal. So it's the same here in Australia. Interest rates getting lower and lower. So investors are desperate to park their money in the best return they can get. And at the moment, the US offering 2% is a lot higher than these negative yielding bonds. I think it's Denmark. Even the 30-year is negative today. We got a story that the 10-year in Sweden is negative today. So all around the world, bonds are going negative, and investors. This is a whole nother video in itself. Why investors would still buy bonds if they know they're going to get a negative return. Well, a lot of that is fear because of other things like currency or banks. At least if you give the government money and Deutsche Bank goes under, you're less exposed to that aspect of the financial system. The other aspect is that the price of that bond itself might go up. And this is where it starts to get really crazy. So let's bring up the 10-year US government bond. And as you'll see, even though the yield, the interest rate that you get has been going down, the price has been going up. So if I sell someone a bond and 2% doesn't sound like that great a deal, all of a sudden when interest rates go negative in the rest of the world, someone says, hey, I'll buy that bond off you that's giving 2%. All of a sudden 2% sounds great comparatively. So this is why the price of bonds are going up. And even those negative yielding bonds, well, what if the best place you can park your money in the future is negative 5%? All of a sudden something that's negative 1% sounds like a better deal. So the price of those bonds will go up. So that's kind of the craziness, the world that we live in at the moment. And, the 30-year Treasury bond below the 10-year, sorry, I'll get to this now. And this visual representation shows it a lot better. So this is the yield curve here. And the problem that the Fed have created is that short-term interest rates, they've currently got interest rates at 2%. And the bond market is a $100 trillion market. It's the smartest market in the world, the smartest minds, all the hedge funds, they do all this research. They've got to park people's money in that huge market. So at the moment, you can get 2% risk-free. That's what the Fed have set the rate at. And yet the bond market is saying, well, we don't believe it's going to stay there very long. We think that things are going to get worse before they start to get better. And even long-term, we see interest rates lower than what the Fed currently have them now. So what they're saying is that the Fed are wrong. The economy, interest rates around the world, you've got them at 2%. There's no way that people are going to be able to pay that out. So you can see here that, the yield curve has that negative slope to it. And comparatively, let's go back through, when times were really, not really good, but I guess comparatively, you'd say the economy was going along better back in 2012, 2011 here. So you can see that the Fed had interest rates at near zero for about a decade after the GFC. And the bond market, the smart money, it sort of has this slope to it, and it's predicting that things are going to get better. And, there was times when the US was growing at 2 or 3%, and that's kind of the outlook here that this red line is showing us. But if we go back towards the GFC, you'll see that during the GFC, again, the bond market, the smart money, is actually saying that things are going to get better. It's before the GFC when the yield curve starts to flatten and invert, saying that the Fed, you've got interest rates too high. The smart money's saying things are going to get worse in the next 2 years. And that's kind of how the bond market, the yield curve, this dynamic yield curve website is fantastic to have a look at how interest rates are priced before different recessions. You see it again back before the dot-com bubble, negative yield curve. The bond market says to the Federal Reserve, the central banks, you've got rates too high. Things are going to get bad before they get better. And there's other places to park your money. So yes, there's billions of dollars have been wiped off stocks as people become fearful about the economy and that slowing down. Less people are going to spend money at shops, at retail, at different businesses. Less oil is going to be used. If we have a look at the price of oil. So all these things tie into each other, and it's really fascinating to watch this play out. So I hope that all make sense so far, guys. But I want to talk about what is happening on Bitcoin and how that relates. So let's just remove that there and go over to Bitcoin. So for Bitcoin's history, Bitcoin's basically been around during a macro bull market cycle. We've seen tech stocks boom, and that's probably a good, relationship to compare Bitcoin to. The fact that, yes, all the Facebooks, Googles, Amazons, software companies, they've really enjoyed a massive run since the GFC. So Bitcoin hasn't been around during a market crash or downturn. And how is it going to perform? So there's two, scenarios that I see playing out. The first one is this slow decay, as there's no crash, there's no GFC per se, where we had all the mortgages, all that lending, that fraudulent behavior came crumbling down. Mortgage-backed securities, the financial system was so fragile, so leveraged, there was bets on top of bets. So a lot of people say that that's still the case, and we've got different types of credit default swaps and obligations these days, and it's probably true, but I don't think there's that much of a black swan. There's more people watching the market. There's never been more data about everything that's going on. So yes, I think the system is fragile and there's lots of things that are overvalued, but at the same time, I'm of the belief that the Fed are going to have to cut interest rates again, particularly if the rest of the world is cutting interest rates. You see the US dollar is going to get too strong. So this is the DXY. This is a basket of currencies compared to the US dollar. So what you can see is that the US dollar has been strengthening a lot recently. And that really puts pressure on all the other countries. If I borrow money off the US, if I'm a developing nation, if my currency is continuing to fall, as we saw Argentina lost 20% in one day, well, all of a sudden I've got to find 20% more money somewhere to pay back my debt. And the problem is that when the rest of the world has rates at 0 or negative and the US is 2%, people want to park money there. Their stock market is chugging along okay. The bond market, I can get 2% rather negative. So all this money is sort of heading to the US, and they've painted themselves in this corner where they've said that they're not going to cut rates. Everything's really great, but I think they're going to just have to cut interest rates, maybe even have to do QE and money printing. If they don't do all the things the rest of the world are doing, the US dollar is just going to get way too strong. I mean, look how much the Aussie dollar has fallen recently. So let's have a look at AUD, USD. And you go back a little while, when Australia was producing things and everything was booming, China was booming, $1.05, $1.10 when I first got into Bitcoin, $1.10. So you got more Bitcoin with your Aussie dollars than the same amount of US dollars. But here we are down at 67 down here. Now, the Aussie dollar example is probably another good example to look at in terms of pricing gold. So because the Aussie dollar is tanking and gold is going up, all of a sudden, if you're in Australia and you chose to invest in gold and silver, and we've been doing videos here, back here, recommending that you educate yourself on gold and silver, and look at it now, it's really taking off. So this is the case in basically every country apart from the US, where gold, Bitcoin, anything that's denominated in your local currency is going up. So I think if there's a slow decline in the stock market to tie this all back together, then maybe people do realize that this is a hedge against uncertainty in the banking system. But if we have a crash, and today was probably the first glimpse of when we've had a pretty nasty crash and a fair bit of panic, the headlines about the yield curve inverting. Last time this happened, it was before the GFC. So when everything sells off hard, it was the same for gold back in 2007, where it sold off with everything else. But then once the dust settles and people start to say, okay, well, what's the result? What has changed from the macro outlook? And the Fed start talking about lowering rates and money printing, and there was a lot of fear about inflation. Then gold just went on this absolute march. So look, in terms of percentage move, what was that? Down about 35%. Go back to Bitcoin here. If we had a stock market crash and Bitcoin was to go down another 35% from where we are today, that would only be revisiting that sort of 6,000 region. Now, at the time, that would seem pretty bad and crypto is volatile. Maybe it overshoots. But at the moment, I want to sort of talk about everything that's happening around us and compare that to previous market corrections. So this is the Fear Greed Index, and in our members group, we're working on an indicator that ties in about 30 different metrics, because this is one of the best ones that I like to keep an eye on to give us a gauge of overall market sentiment. And we're at extreme fear. So I think it was 11 yesterday, and it's up to 13 today, but it's only been lower, I think, on 2 or 3 occasions. And I'm not sure how accurate this data is. They do tell you where they get it all from below in the description. But certainly feels like there's a lot of panic, particularly with altcoins. People started to get pretty scared. And so let's go back, change over to Bitfinex or Coinbase with more history here. And today I did a detailed write-up for our members about 2017 and the corrections we had at the time. So there was, 3 that I've seen put up here, about 30 to 40% corrections. And at the time, people were very, very fearful. People didn't understand what a hard fork was. People didn't understand what a network split was going to be if we couldn't get the SegWit 2x part through. People were fearful that China banning Bitcoin, and China had the majority of Bitcoin trading volume at the time. So each of these times, people were extremely fearful. You can go back and watch the live video I did at the time saying, guys, I actually think now is a great time to buy. I don't think Bitcoin's dead by any stretch of the imagination. And, we're starting to get that feel again now. So we've been through that bear market, the correction, then we've had that capitulation. I think so much has changed. A number of metrics, the people in Facebook groups, the subscribers on YouTube channels, the views, the demographic of the people I see investing, the funds and the investment products that people are putting money in. I just don't see how we'd go back and make new lows unless something really fundamentally changes. So the way I think about it is, we've gone from 3,000, we're at 10,000, and everyone is in this panic mode, starting to talk about how price is going lower and lower. Now, in terms of history, we've got the daily RSI at 40. Again, 40 or 30 during a bull market, touching oversold has been a blessing to buy. So zooming in, really short term, I've been talking a lot about this 4-hour being oversold. This has been a fantastic time to buy in bull markets, at least for a bounce. For those of you that want to put your trader's hat on, sure enough, nice long wick, a nice hammer there, big volume. Maybe we're going to get a bit of relief in the immediate short term, because that has been a pretty nasty fall. And all of a sudden, everyone starts piling into their short positions and talking about how it's going to go lower. But zooming out, were people talking about that here or 14,000? People were in an absolute rush to buy. People ring me up and saying, what would you do if you were me? And I say, buy a little bit every week for the next few months and get the average price, because so many people FOMO in this parabolic phase, and Bitcoin might chop around. Maybe we do chop around a bit lower or sideways for months on end. But at the same token, I guess I just wanted to remind you of history, where there has been so many occasions where things have happened a lot worse than what's happening now, created negative sentiment in the crypto markets. But we have to be aware that Bitcoin has not been around during one of these extremely negative stock market crashes, sell-off events, and that is possibly something that could drag it down, as it dragged down gold before the ultimate bull run. Can you imagine the bull market if Bitcoin is to get dragged down in a stock market crash, and central banks and governments are sort of coming up with new theories or excuses and new names for the next round of QE and interest rates, why they have to go negative and ban cash? People are going to be absolutely all over this stuff. I just posted before that our documentary's passed 200,000 views. More and more people are sort of encouraging their friends and family to learn about all this every day. It really is amazing. And as I speak, I did do a post for members about all of what I've outlined today, probably in more detail in this post, saying that I think we are going to have some sort of capitulation, volume climax, and we're at least due for a relief rally. I posted today, and it looks like we're getting that now, up $500, 5% or so. So let's have a look at the alts. Still underperforming relatively. and it is a Bitcoin story for now. So Binance have paused trading. That's why we haven't got any movement on that chart. But I'm going to have a quick whip through all your questions. I think that is most of what I wanted to cover there. And the next thing I'll mention and then take some questions is the story here about a huge Chinese Ponzi scheme. I haven't heard too much about this one in the West. Plus token. If you've heard of this, let me know. If you've got friends in China, those contacts, I always find that stuff fascinating. So yeah, Ponzi scheme that apparently had accumulated up to 70,000 Bitcoin and 800,000 ETH. And they've begun moving this in chunks to different exchanges. And there's actually some of the great monitoring companies out there, Chainalysis and the like, that might be helping to stop this. So I'm wondering if maybe that's why Binance paused trading, or if that was a scheduled maintenance. But never nice when A, people get scammed, but B, they exit scam and try to dump on exchanges all at once. Okay, so what questions have we got coming in? Hard day on Wall Street. New Zealand just became the first country to legalize salaries in Bitcoin. Yeah, so in Australia, I encourage you all to check out a company called Get Paid in Bitcoin. It's run by one of my mates down here in Tassie, and you can choose just to get $20 or $50 a week of your wages in Bitcoin, and your boss doesn't have to agree to it. The company does that on the back end. So a very cool option that many people have chosen to dollar cost average. Rapol posted a dire warning on Real Vision. Yeah, I recommend everyone check out their free stuff, and I think they even have a trial for their premium stuff, which is longer form interviews. It's only $1 for a 3-month trial, I believe, at the moment. Would I invest in shares at the moment? I can't give financial advice. Everyone's individual circumstance is different. But personally for me, longer term with your super, your retirement funds, those sort of things, you can choose, even if you don't have a self-managed super fund, you can choose to go more defensive. So if you're worried about things, you can choose to go more defensive, and your super fund puts that in more cash or in bonds, and you still get a low rate. Or even if you want to go 100% cash and get zero return, at least you're not in stocks and property and things if that's what you're fearful of. But at the same time, I started Nuggets News because I hated some of the fear porn that was out there. People that would tell you that stock markets were going to crash, and people have been saying the same thing every year. So we have to put our trader hat on and say there's going to be a time, even if the market does have a big correction or crash, that it's going to be a great time to buy and put yourself back into stocks. Or if crypto crashes, property keeps correcting, there's going to be a time when maybe property becomes undervalued, or there's houses in your suburb that are now a good buy. Rent it out, do it up. So everything ebbs and flows, and you don't want to live in that mindset of it's going to crash. It's we're going to be pitchforks, Mad Max. Bitcoin is the biggest scam ever. Why do you think that, Rezotovin? Total stock market would be in the hundreds of billions wiped off worldwide, I reckon. What's the company called again? Get Paid in Bitcoin. Best portfolio allocation during a recession. So even during a recession, people still go out and buy their toilet paper. Maybe they cook more at home. So a lot of the supermarket stocks, what they call defensive stocks, actually go up, for example. So being aware of these things, it's really important. So fantastic to see as we speak. Another big green candle. I really got that feeling today. As I said, I did a detailed post for our members in our Facebook group about how time and time again, I just see everyone panicking and thinking the world is ending. And we often get, as a trader, these big relief rallies. And recently, I have switched over to other exchanges away from BitMEX, and I'm going to do some tutorials on those for you guys as well. USA regulation towards cryptocurrencies. Let's take it as it comes. They're talking about these FAFTA rules, but again, if you're playing within the rules and doing your KYC and reporting your tax and that, guys, then they're not going to be able to ban crypto. There'd be I think that honestly, look at Hong Kong and the yellow vests. There's so many people that are passionate about gold and crypto. I think there would be a lot of pushback from the industry bodies and the businesses. There's so many businesses just in Australia, let alone the US. Imagine what Coinbase and all those people would do if they actually said we're going to ban crypto. There'd be so much lobbying. I think there'd be Occupy Wall Street style marches in the streets. It's your money, your value. Why aren't you allowed to park it in gold? If you're allowed to park it in stocks, or you're allowed to go buy alcohol and cigarettes, you should be able to park your money where you want to. Is the halving priced in already? Definitely not. So many people were completely unaware of the halving, and when I did that video about Litecoin and then it ran, people just weren't aware of that. I still think people don't understand it. I think the Fed is going to buckle, not necessarily to pressure from Trump, but it's just the market is telling them they're wrong. Markets are crashing. Bond markets are signaling that they've got it wrong. Dan saying that medical stocks often hold up when people get sick in a recession. As grim as this sounds to say, more people unfortunately get depression. They lose their jobs, and pharmacies are one of those industries I worked in, and it's known that pharmacies make more money during a recession. So I know that's a bit sad to say, but there are areas that you can look at. The Ashes is on. Aussies are bowling. Okay, well, I will wrap it up soon. In the last video, ahead of time, I think Bitcoin halving is going to get priced in the coming months, but it's still 9 months away. I don't think it's in yet. The Aussie dollar, I don't think any currency will ever be backed by gold because governments have gone too far. There's not enough gold, or the devaluation. There's just too much that has happened for that to go back to that standard now. So that's why I think something more sound is going to take over. Where do you buy gold in Australia? We have a link in the description below. Ainsley Bullion or Perth Mint is another one. But we recommend Ainsley. They're a friend of the channel. 48 years ago today, Nixon removed the gold standard. Thanks, Jack. That's pretty cool to know. How low can the Aussie dollar go? So when I remember this as Bitcoin continues its march higher, when everyone thought it was about to die and keep going down, how low can the Aussie dollar go? So I remember as a kid, we were lucky enough to go to the US. And it must have been when I was in primary school and the dollar was under 50, I remember. I think it was 47 cents when we went on holiday. So it must have been around there. Yeah, right around even September 11, the Aussie dollar was below 50 cents. So Australia's, would you have said Australia was a really weak country back then? Probably not. So the Aussie dollar really strengthened because of the commodity boom in China. But could it go back there? Then maybe. It all depends on what our government do. So you guys know that I think that the government's not spending enough on research and development, innovation. The statistics show that. And as Martin and I have spoken about, far too reliant on housing and banking. Too few sectors. So there's some good things happening in education, but I think the government being obsessed with running this surplus is just another thing we're going to look back and say, well, what were they thinking? The economy was going into recession and the government were trying to get a surplus. I don't know if we can say this is the last time under 10K, guys. So as I've spoken about, yes, we were due for a relief rally, mainly on the 4 hour. So the 4 hour hadn't been this low since Bitcoin was in the low 3,000s. So this is a beautiful looking reversal candle, but whether or not that means that we only get, a little bit back up into the moving averages, maybe we do get more follow through, but we have to take it one day at a time and have a look how the volume is compared to, the sell-off volume that we've had on the way down. So it's not straight off to the races and back to new highs, but when sentiment gets that bad, it's often time to be a contrarian. England 1-0. I'm not sure if you're joking or not, Dan. Oh, 1-9. A few people have said it. That's fantastic. For you guys that don't know, I'm a cricket tragic. Played with our test captain, Tim Payne. Fantastic guy who couldn't get a game for his state, and he's now the captain of Australia. after going through some mental battles. He's got a great story. I should get him on the podcast as well. So cannabis industry, risky stocks aren't going to necessarily boom in a stock market crash. And that's very much how we have to think about altcoins at the moment. Altcoins dead? Definitely not, in my opinion. So much more would have to go wrong for altcoins to die. Now, XRP, for example, is one I've been pretty critical of, and it had a bad day today, but so did all the altcoins. I definitely think there's going to be more altcoin cycles in future, but they're just not going to look like 2017 where you can throw a dart at a board and get rich. You're going to have to be more selective and do a bit more research. Okay, guys, well, that's been really fantastic to talk about bond rates, dynamic yield curves. I'm going to tie it up there. I hope you have enjoyed that. And if you want to join our members group for daily updates, head over to nuggetsnews.com.au. I'll talk to you again soon. Cheers.